Hey, what's up, guys? According to Ray Dalio, the US is relatively declining as China power is rapidly rising. In this video, we will take a look at the current US market and then we will examine if the rising power of China can overtake United States. Back in February, when this illness reached the United States and as the economy started to shut down, stock market rapidly dropped by 35% in just 4 weeks. S&P 500 dropped from its new recent all-time high of $3,400 till $2,200. As Fed injected $3 trillion, it solved the liquidity crisis, and not surprisingly, stock market rebounded back to the current price of $3,100. This is basically where we were in November 2019. It was very fast recovery with the Fed involvement. Going from $2,200 till $3,100, that's a 40% bounce back. Or if we think slightly differently, stock market was able to recover 75% of its losses since March 2020. But will there be any consequences from all those money printing? Or everything is back to normal and bull market is back for good? Well, first and foremost, Ray Dalio thinks that US economy would lose approximately $4 to $5 trillion of GDP in this downturn market. First quarter of GDP was down by 5%, and second quarter is projected to be down by more than 40%. So we might even see more losses than $5 trillion. But the Fed responded very fast with all those stimulation checks, and it increased its balance sheet to new all-time highs. In March 2020, Fed's balance sheet was at around $4 trillion, and now it's at near $7 trillion. In just a matter of few weeks, Fed printed $3 trillion. Ray Dalio further addressed this concern because all this money printing happened. It raises the question, what is the value of US dollar? Will the value of US dollar drop as we enter into QE infinity? Without a doubt, it will have some negative impact in the long term. In fact, let's take a look at this recent Ray Dalio interview with Washington Post and what he had to say about our current economy.
$1 trillion in lending authority from the Fed and $3 trillion in fiscal spending approved by Congress. That's a lot of money, by his estimate, 40% of the GDP. Start us off before we get to the longer term issues by just giving us a sense of how you react to what you hear from Larry Kudlow in the White House.
Well, I think he started off by explaining that he really didn't know very much about. He acknowledged that there was a wide range of possibilities, and that's the case. And then as he said, there could be a V and there could be a W, and who knows. And then they have to pick one, and so there's a congressional budget office. But I think the uncertainty around that is clear. There's a lot of uncertainty. Regarding the creation of the money and credit that's been produced, I think it's important to realize that for every individual, every company, and every government, there's a certain amount of revenue and income, and they have a certain amount of savings. And this economy, this downturn, produced a hole in income and a hole in balance sheets. And if those holes were not filled in, the economic consequences of that would be devastating. And so we estimate that there'll be $4 to $5 trillion, roughly speaking, in losses that come in the United States, indirectly or directly, and that the amount of filling those in quickly has made a big difference. However, it brings into question what the value of money and credit is. So there's been a lot of money and credit produced, and that will have implications longer term. So when we look beyond the immediate and we hear the sort of questions that have been asked dealing with tax cut changes and so on, I think we're going to come into an era in which the value of money, there are limits to the capacity to print money and maintain the value of money. And there are going to be questions that are capitalist versus socialist type of questions in terms of how the bill is divided and how what the world looks like in the future. Those things will take place in the future. So I think his assessment was right, but I don't think we're yet talking about the big things that we need to talk about.
We're going to turn to those big things. I just want to take one more minute to ask a more immediate question. I've heard people wonder whether what we're living through now, both the pandemic and the enormous economic dislocation of the shutdown of the world economy, should be likened to a tornado which sweeps through and does enormous damage, but then is gone, and you rebuild, or an earthquake which leaves behind rubble that can take years and years to rebuild. So I just would put that to you, Mr. Dalio, when you think about this, do either of those fit better, the tornado or the earthquake analogy?
First of all, I think that in both of those cases, they're apt. And whether we call it one or the other, there's a great deal of economic damage which will remain and will require a lot of repairing after this. I think what you mean is whether there are structural fissures and whether those will be deep. And I believe they are. And that's why I think that there are three big factors that exist today that did not exist since the 30s, that are those things that create those fissures. I think those three big things that the setting that this downturn has happened in is, first, we have a debt monetary situation that did not exist since the war years. In other words, when interest rates hit zero and you have a lot of debt and you have to print a lot of money, that changes the game. It means that it's not easy to stimulate an economy by monetary policy in the usual way. And you have to deal with the debts, and you're in a debt monetization mode. So that's one factor that you have to go back to the 30s. The second big factor, that's the lay of the land that we will remain with, gap between socialism and capitalism and Republicans and Democrats and so on. And that wealth gap issue, when you have an economic downturn at the same time, is particularly difficult. And the third factor that didn't exist before, but existed in the 1930s, which is a concern, is the rise of a power to challenge the existing world power, the rise of China to challenge the United States, in which case there's a lot to argue or fight about, and that's the backdrop. So a downturn would have come from one reason or another. They always come. And those structural issues are the big important issues. And the 1930s gives a good case if we look at those. And if we look at the sizes of the debt and the printing and so on, that's also as comparable to the war years. That will drive the nature of what's to come.
Money printing I addressed earlier. I think we all agree that over the long period of time, we will have a negative impact on US dollar. But over the short term, I would argue that US dollar might be stronger than most of people think, as more than 20 trillion of US dollar denominated debt globally. More than 70% of the world trade is conducted through US dollar. So yes, the supply of the dollar increases throughout the money printing, but there is also very high demand for US dollar globally. This could be one of the reasons why we haven't seen any inflation for the past decade despite the massive printing money. So I think US dollar isn't going anywhere, at least in the short term. But without a doubt, I think there will be some harsh economic consequences soon, as velocity of money highly reduced, and even if many businesses receive free money from the Fed, they do not really know what to do with those money because the economy is down. Another very important thing I would like to point out is that Ray Dalio mentioned the rise of China that can challenge United States, and Ray Dalio was very vocal in LinkedIn to prove his point. Ray Dalio outlined his case for why world's largest economy would be overtaken by China very soon, presently the second largest economy on the planet. Dalio thinks that China is in better footing and may surpass the United States. There has been a sweeping assumption that China will eventually overtake US economy dominance in the real terms. Standard Chartered Bank, for example, had forecasted that China will likely become the world's largest economy at some point this year. US gross domestic product or GDP was at $21.4 trillion on nominal basis, while China's GDP was at around $14 trillion. By another measure known as purchasing power parity, which weights countries' respective purchasing power, China's GDP would be at $27.3 trillion based on the data from International Monetary Fund. Also, Elon Musk predicted that China's economy would surpass the US by at least 2-folds. A thing that we feel pretty strong is that China's economy is probably going to be at least twice as big as United States economy. However, in January, researchers at the Capital Economics made the case that China would not likely grab the crown from United States as the largest economic power in real terms because the country faces structural problems. I also believe that as long as the US dollar stays the world's reserve currency, China will have very difficult time to beat United States. Let me know, what do you guys think about United States and China? Can China overtake US? Leave your thoughts in the comment section below, hit that like button and subscribe.